The broadcast is now starting. All attendees are in listen-only mode.
Okay, guys, hi. Good evening. This is Neil Green again with you on this weekly webinar, just like every Tuesday. Just want to wait for about a minute or two for all of you traders to attend. So, gonna be back with you in just a minute. All right, just a second. Okay, let's start. Hi, so as I said, this is Neil Green again with you. Thank you for joining me on this iTrader.com webinar. This is a weekly webinar brought to you by iTrader.com, just like every Tuesday at 6 p.m. GMT time. We're doing these webinars in order to give you some information, on the events that are taking place at the same week. And actually, this time we're gonna talk about, I think, the biggest fundamental event in the market. I guess most of you um, know what this event is all about. If you don't, I'm gonna tell you. And let's learn today how do we trade? How do we trade this event smartly? We're talking about the NFP. All right. I don't know if you heard about the NFP. By the way, guys, if you have any questions during the webinar, you're more than welcome. You have a chat window. Okay, so all you have to do is just to write me down. I'll do my best in order to try to answer all your questions, of course, in between. And at the end, if you have any questions, we're gonna have some Q&A session for about 2-3 minutes. And I received a lot of emails from you guys during the week talking about this NFP. So let me explain what it is. Let me show you how to trade it and how do we do it smart. So if any of you had a week that wasn't the greatest week in the world, we have a great chance this coming Friday to try and fix it. And let's start. So the NFP stands for non-farm payroll, okay, which means except for the farming industry because they have their own indices. Okay, we're talking about non-farm payroll, which means this is a governmental report that measures the number of new payrolls minus people that were fired in the American economy in the United States of America, which is the strongest economy in the world. And according to this, okay, it affects a few assets that we're gonna talk about, and I'm gonna show you a few opportunities what assets we should look at, what should we expect from the asset, what is the volatility expected from this event, and what information do we need to read during this NFP in order to identify, because you see big events that has strong volatility on the market, strong effect on the market and high volatility, I'm sorry, all we need to know is to recognize where the market is going, okay, and trade it smart. Now this kind of event is a short time trade. We're talking about 30 minutes, usually 1 hour, no more than that. Okay, usually people when they trade it with smart traders, they do it with high leverage, okay, in order to try to catch the momentum and trade on this wave and take this trading opportunity. Now the NFP takes place every first Friday of the month. Okay, this is a governmental report brought to you by the US government every first Friday of the month. As you can see, the non-farm payroll will be published on Friday. Okay, guys, you can write it down at 12:30 GMT. Okay, so if you're from London, it's gonna be 1:30. If you're from mid-Europe, 2:30. So set the clock so you'll know exactly what time this NFP will take place. We're talking about 12:30 GMT time this Friday. It's gonna be June 1st. and actually every first Friday of the month. Okay, so we're gonna get the information about the period month, which means May, which is now. Okay, on June 1st, we're gonna get all the U.S. You have to understand this report is kind of a mirror to the U.S. economy, and we are getting the economic situation of the U.S. economy, and we can trade according to this. Okay, so the non-farm payroll will be published on Friday, 12:30 GMT. The U.S. jobs report is considered the biggest monthly fundamental event, which means the effect is going to be usually it's very strong. And when we have strong effect on the market, it means strong high volatility. High volatility for us as traders means trading opportunities if we know how to recognize them. And this is exactly what I'm going to teach you right now. Now, the jobs report indicates the health of the US economy. Okay, usually when we have a good report, okay, good results, more people are employed, making more money, unemployment goes down. Okay, when unemployment rate goes down, if the NFP is high, which means more people were employed, more, I would say, payrolls than expected. Okay, it's a good sign for economy. And of course, we're talking about, since Trump was elected, we're talking about wages. You see, since Trump became a president of the United States on he was elected on November 2016, and he's the president of the United States since January 20, 2017. The U.S. economy added more than 2 million jobs. Okay, let's open the MetaTrader to take a look at the U.S. Economy. Okay, if we're taking, for example, the S&P 500 or the Nasdaq, which represents the 100 technology stocks with the highest value in the United States, on the monthly chart, this is when Trump was elected, right here, and you can see that the market flies up like crazy. Okay, the booming up, the highest price ever, and the U.S. economy situation looks in a great shape. So we're talking about 2 million jobs, 2 million new jobs, new payrolls since Trump was elected to be a president, and we're waiting for the next report. Is coming Friday. Okay, the last NFP showed the lowest unemployment rate since 2001 of 3.9%. Okay, so we didn't have it in 17 years, guys. 17 years. We have this NFP once a month, every first Friday of the month. And just for you to understand what's going on in the US, okay, how good the situation is, how strong the economy is. Okay, of course, if unemployment goes down, it's a great sign because it means that more people are employed, right? More people are getting up in the morning and going to work, which is a great sign. Okay, this is a great question. Where can we find the information? I'm sure you work with investing.com or Forex Factory, or you can do it for our website. I like Forex Factory. You can see this is on Friday, 12:30 GMT time. Okay, you can set the clock to your time. Actually, we have three numbers here. You see unemployment, the non-farm payroll, which is the NFP itself, and average hourly earnings, and I'm going to talk about each one of them right now. So unemployment rate, as you can see, 3.9. Okay, this is the forecast. We have the forecast, the previous number, and the actual. When we trade a fundamental event, just for you to know in general, okay, you have to understand this whole market is based on expectations. Okay, if we expected something and what actually happened in reality is better than what we expected, usually some assets are getting stronger. Okay, depends what the event is and what assets it affects. And of course, if the actual number is worse than expected, we expect more sellers to come, and the price of this asset is supposed to go down, to go negative, which both of them are good as long as we know where the market is going, right? Because we have buy and sell options. We can go on a long position or a short position on each asset on the MetaTrader. So, right, so we can use both, and we don't need a lot of money since we have the leverage. Okay, so we trade on the difference between the forecast and the actual number. Now, 12:30 GMT time, we have these three numbers. Okay, looking at the unemployment rate, this is what I started to talk about, 3.9%. Let's take a look at the chart. As you can see, this is 2011, 2012. Unemployment was 9.2%, went down to 8% on 2012. 2013, on February, we're talking about 7.8%, and went down to 5% in 2015. 2017, we're talking about 4.8%, and right now 3.9%. Okay, the lowest since 2001. let's open it up a little bit. And 2001, there we go, even more than that. When it was 3.9% for the last time, you see it was here. So we're talking about 17 years that unemployment wasn't so low. Okay, last time that it broke the number 4, we had a breakout and unemployment went down to 3.9%. Last NFP, the dollar got stronger, and it was a great trading opportunity back then. And we talked about it on past webinar when we talk about the NFP. Now, the dollar jumped after the publication and presented strong opportunities. This is what happened last time. This is a monthly event. It takes place every first Friday of the month, so at the beginning of May. Okay, investors are more concerned today with wage growth than unemployment. This is quantity versus quality, and let me explain. As you can see, we have 3 numbers, okay, that are published at the same time. We have the non-farm payroll, the NFP, which measures the change in the number of new payrolls in the market. So for the month of May, okay, this is going to be published on Friday, which is June 1st, and we're going to get the governmental reports on the month of May in the United States of America. Now, just for you to understand the logic behind the numbers. If the forecast is 190K, it means that we expect, all the analysts expect in the market, that the NFP report is going to have 190,000 new payrolls, 190,000 more jobs, okay, added on May. All right. Of course, any number that is higher than that should be positive for the US dollar, which means we're talking about quantity. We're talking about number of new jobs, right? If we have more jobs, it's a great sign, right? If unemployment is going to stay 3.9 or even go down to 3.8, great sign, okay? Which means unemployment goes down, more people are employed. But when we talk about jobs, you have to understand this, all right? Since Donald Trump was elected, you know what? He was elected because he talked about, make America great again, bring America back to the Americans. He's doing everything in his power to try and to recover, as he sees it, the U.S. economy. Okay, we had the trade war with China. I don't know if you remember. Manufacturing products in China is much cheaper. So the U.S. government have decided, actually Donald Trump have decided to tax these products coming from China. China have decided from their side to put a lot of taxes on American products. The idea is Donald Trump pointed and his government, they want the Americans, this huge economy, to manufacture their own products and give their services in the United States. Okay, they want products made in the US, not in China or other countries. Okay, this is where the trade war started from. And so we're talking not about only about quantity, which this is what the NFP itself, it's about quantity. Because if we expect 190,000 new jobs, any number that will be higher than that, of course, is quantity, more jobs. But what is really, really important is the quality of the jobs, all right? We expect average hourly earnings, okay? The average hourly earnings, how much money people make per hour, to go up by 0.3%. We expect an increase of 0.3% in the average hourly earnings, okay? When we talk about average hourly earnings, what are we talking about? We're talking about wages. We're talking about salaries. We're talking about how much money people make, how much money does the average American employee is making when he's going to work, all right? This is what we talk about when you say quality, okay? So we want to understand, okay, you understand we have a difference between quantity and quality, and these reports are published exactly at the same second at 12:30 GMT this coming Friday. So we have the unemployment rate, okay, these are the numbers to beat, non-farm payroll 190, and we expect an increase of 0.3% in the average hourly earnings. Okay, cool. Now, take a look. So quantity versus quality, okay? Quantity is the NFP itself, the number of new jobs, and quality is the average hourly earnings, how much money people make per hour. Friday's NFP forecast, I just showed you quantity. Number of new jobs expected to be 190,000 new jobs. Quality, wage growth expected to rise by 0.3%. Okay, and unemployment rate steady at 3.9%. So these are the numbers. These are the three numbers. Now, traders will look for short-term volatility. Okay, I told you, and I will tell you again. When we have an event like the NFP, okay, you know what? Let me show you. Let me show you. Last time that we had the NFP, it was on the beginning of May. Let's take, for example, the euro versus the dollar. Let me just show you. Unemployment went down to 3.9% for the first time in 17 years. Okay, it affected the dollar strongly. When dollar goes up, euro versus dollar goes down. See, dollar is the secondary currency when we trade euro versus the dollar. So if I look at the daily chart, you see that the dollar is getting stronger. Actually, it's a scissor effect because here the euro is getting weaker as well because of the elections in Italy and so on, and higher interest rate in the US make the US dollar go stronger. But I just want to show you in 30-minute chart, okay, what happened last time when we had the NFP. Last time the NFP took place on, let me check, last time it was, let's see, first Friday of May, it's May 4th, okay. So let's go to the MetaTrader, okay, and check May 4th, May 10th, May 8th. There you go. You see, this is the NFP itself. Now you see the reaction. The dollar got stronger. Okay, we're talking about this is in half an hour. Each candle represents half an hour. This is a 30-minute chart. Okay, this is a great trading opportunity right here. We're talking about this. This candle opened at 1.1966 and closed 1.1920. We're talking about 46 pips in a few minutes, in 15 or 30 minutes. Okay, just for you to understand, if I'm talking about 10,000 euro account, talking about small accounts, okay, 500 euro per lot. So you could take 20 lots, and then it's $200 per pip. Okay, the movement was, how much did we say? 66 to 20 multiplied by 46 pips. Okay, so out of a 10,000 euro account, doubling your account in about, I don't know, 10 minutes, 15 minutes, I think it's pretty good, right? Okay, almost doubling your account. So just for you to understand the volatility, the high volatility, and the huge opportunity, if we know how to recognize where the market is going according to the numbers, to the wage, to the average hourly earnings, the NFP, and the unemployment rate when we trade this report. Now, traders will look for short-term volatility. As I said, big dollar movement can happen on a match. When I say match, it means both quantity and quality point on the same direction. In this case, we're talking about dollar purse could move by 0.8%, which is a lot. Okay. When I talk about actually, if you use leverage, okay, you have an iTrader the opportunity to use leverage. If you have silver's account 1 to 200, on gold account 1 to 400, platinum account you can do 1 to 500. Okay, depends what type is your account. Most of you, I guess, have a silver account. What I'm saying is, when I trade on a pair, okay, I'm looking for a match. Okay, when we have a match, it means that quantity and quality are going the same way, which means if NFP, for example, the actual number on this coming Friday at 12:30 GMT is going to be higher than 190,000. Okay, this is when we talk about quantity, more jobs added in the U.S. market than expected. If quality of the jobs is better, which means the average hourly earnings will increase by more than 0.3%, and unemployment rate is going to stay at 3.9 or even lower than that, okay, we expect the dollar to explode, okay, go one way, and this is a great trading opportunity for us, and we know exactly where the market is going. And using this leverage, okay, only think about how much you can fund your account with on this trade. Okay, so just for you to understand the numbers, main assets to trade. Okay, of course, the US dollar versus all major currencies, euro versus the dollar on a strong downtrend right now following Italian elections. They told you the Five Stars Party got a lot of power in Italy. We're talking about Italy. Okay, a lot of people are afraid that Italy are going to leave the EU. There are talks about it, right-winger party, and a lot of uncertainty and the EU result. Okay, so the euro is getting weaker because of that, and the dollar is getting stronger on higher rates. I told you the Caesar's effect. Okay, when I say Caesar's effect, the idea is take a look at the euro versus the dollar in a daily chart. Okay, the euro is getting weaker because of the elections in Italy, and the dollar is getting stronger because of higher interest rate. Okay, interest rate in the US was till 3 years ago 0.25%. Since 2008, the big crisis, right now is 1.75%, and we expect rates to go up to around 2.25% by the end of the year. Okay, higher interest rate means the US dollar is getting stronger, euro is getting weaker because of the elections in Italy, and you see the euro versus the dollar. Each candle here is 1 day. Okay, you see where it's going. We have a downtrend. Okay, and this is what's going on with the euro versus the dollar these days. US dollar versus the Japanese yen trading around 109 with a positive momentum. GBP, Great Britain pound versus the pound versus the US dollar trading low at around 1.33 with a downside target, which means if the dollar is going to keep getting stronger, the next support level on the technical level supposed to be 1.3. Okay, let's put a line here just for you to see. Okay, 1.3240 even went down since I wrote it. Okay, next target will be around here. You see this support line here? Okay, 1.3. So we're talking about 200 pips more. And gold actually is trading around $1,300 per an ounce because of geopolitical fear. Okay, as you probably know, gold, when we trade on the NFP, we have actually gold is kind of safe haven. Okay, this is what we call this asset because it works with an opposite correlation to the main currency, especially the US dollar. On the NFP, every time you see that the US dollar is getting stronger, the gold is getting weaker, and the opposite. Okay, so remember, US dollar goes up, usually gold goes down. When gold goes down, US dollar goes up. Okay, this is why I always recommend when you trade with a bigger portfolio. When we trade with a bigger portfolio, we can do two things, and this is the right way to do risk management. First, you can diversify your portfolio, which means you don't put all the eggs in one basket. I don't trade only on the euro versus the dollar, or only on the pound versus the, or only gold. I can diversify. I can trade on US dollar versus 3 or 4 majors, and then trade with an opposite correlation with the gold. Okay, buy or sell depends on the numbers that I'm going to get on the NFP on this coming Friday, and actually take advantage of these opportunities to trade on a few assets. Okay, usually people use this leverage, but I wouldn't use a lot of leverage, which means I wouldn't put all of my margin. I would deposit more money into my account to work with a bigger portfolio and lower margin. This is the right risk management. This is how we do it. And of course, good luck. Any question, guys? Anything you would like me to clarify? In the meantime, I'm going to tell you that I'm going to be here next week talking about the next topic. All you have to do is go to news, click on webinars. Okay, put in your first name, last name, and your email address, so your account manager will be able to contact you back. More than that, I'll tell you, I want you to talk to your account managers right away, today or tomorrow, to get more information. We're talking about this coming Friday, right? Today is what day is today? Tuesday, so we have Wednesday, Thursday, and Friday to get your account set for this NFP. Of course, if you have any more questions, more than welcome to write me an email and contact your account managers today or tomorrow to get more information. I'm going to be here next Tuesday exactly at the same time, 6 p.m. GMT time. Okay, of course, you know, I'm going to trade this NFP because this is a great opportunity for about 30 minutes, 1 hour, no more. Okay, when you take the trades, put some protecting orders such as stop loss, okay, and take profit. Okay, be careful that if the market goes against you and you didn't recognize it, then, you know, quit fast, okay, because the market is going to be very volatile, very sensitive. The volume is going to be very high, a lot of money coming in such an event, which means even though it's a trading opportunity, it can be risky from the other side. So, okay, protect yourself, do it smart, and questions. Okay, Vincenzo, right? Did I pronounce it right? US gold goes down with a strong dollar. That's correct. But it says that due to geopolitical fear, it's trading at 1,300. That mean that it's great to sell gold or buy it. Okay. Let me try let me try to give you the bigger picture. Okay, when we talk about geopolitical issues, a lot of things are taking place in the world. Usually, gold is getting stronger. Okay, when we have a lot of uncertainty, and think about it. When there's an uncertainty, people don't know where to invest their money, what currency to put the money on, if they should buy stocks or whatever. Okay, so think about gold as a parking lot, as a huge parking lot. Okay, if nobody knows where to put the money, people buy ounces of gold, and this is why gold right now is traded around 1,300, which is pretty high. Um, if US dollar is gonna get stronger, of course, we expect gold to go down. Just for you to know. Actually, when you trade on the NFP, you're gonna trade on 30 minutes or 1 hour, no more than that. So what you actually should do is, if you have a match, okay, if you have a match of the quantity and the quality, if you have the average hourly earnings with the NFP number itself, the new jobs, and unemployment, okay, all going the same direction, or even two of them, and one is as expected, I would go with the US dollar against all majors, and against the gold. I'm sorry. Gold is marked, by the way, guys, just for you to know, XAU versus USD. You can find it down here. There you go. When you say sell gold, it depends. If the numbers are good for the US dollar, it means US dollar goes up, gold goes down usually. Okay? If there's a match, a good match, which means the US dollar is getting stronger, we expect gold to go down. Okay? Going with the dollar against the gold. Okay? If it's the opposite, if we have a negative match, for example, we would do it the opposite. Okay? If you believe that a certain asset is going to go up, of course, okay, if you believe that a certain asset is going to go up, okay, you want to go in a long position and buy it. If you believe that the price of a certain asset is going to go down, you want to go in a short position and sell it. Depends on the numbers. Okay, I cannot tell you whether to buy or sell because I don't have the numbers yet. We have to patiently wait for Friday. Okay, guys, I would like to thank you very much for participating. I'm going to be here next Tuesday. Great. And contact your account managers today or tomorrow. And best of luck, and thank you very much for participating. See you next time. Bye bye.